Based on the historical data and forecast, Bitcoin shows a volatile trend with periods of consolidation. The RSI consistently remained below 30 for most of the period, indicating an oversold condition, suggesting a potential upward trend. The Bollinger Bands show that the price is currently near the lower band, reinforcing the possibility of a bounce. Considering these factors, I propose a long position strategy. The entry price will be $87,300, coinciding with the forecast price on December 9, 2025. The stop loss will be set at $86,300, just below the support level, to protect against a potential downside break. The initial target price will be $88,000, aligning with the forecast price for December 9, 2025. To refine this strategy, we will implement a dynamic target based on the RSI and Bollinger Bands. If the price reaches $88,000 and the RSI rises above 50, indicating a shift in momentum, we will adjust the target price to $88,800, which is the forecast price for December 3, 2025. If the price fails to reach $88,000 and the RSI falls below 30, we will reduce the position size by 50% and maintain the stop loss at $86,300. This approach allows for flexibility and adapts to changing market conditions, maximizing potential returns while minimizing risk. Based on the historical data and forecast, Ethereum has shown a volatile trend with periods of consolidation and potential downward pressure. The RSI consistently dips below 30, indicating oversold conditions. The forecast for the next week projects a continued downward trend, with prices ranging from $2,870 to $2,800. Combining these observations, I recommend a short-term short strategy. Enter a short position at $2,870, placing a stop-loss order at $2,950 to limit potential losses if the price unexpectedly reverses. The initial target price should be $2,790, aligning with the established support level. To maximize returns and mitigate risk, I suggest a dynamic trading approach. If the price reaches the initial target of $2,790, consider moving the stop loss to break even, effectively securing profits and allowing the position to potentially benefit from further downward movement. If the forecast continues to be accurate and the price reaches $2,800, consider closing the position to secure profits. This combined strategy leverages the oversold RSI, downward forecast, and established support levels to achieve high returns while carefully managing risk through strategic stop-loss placements and dynamic adjustments. Based on the historical data and forecast, XRP has been trading within a range between $2.03 and $2.2. The RSI has fluctuated between 31.5 and 48.5, indicating periods of oversold and overbought conditions. The Bollinger Bands have been narrowing, suggesting a period of consolidation. The forecast for the next week indicates a slight downward trend, with prices hovering around $2.05 to $2.1. Combining these factors, I recommend a cautious strategy focused on short-term price movements. My proposed strategy is to implement a combination of RSI and Bollinger Bands trading with a focus on range-bound trading. We will enter a long position when the RSI dips below 30, indicating an oversold condition, and the price touches the lower Bollinger Band. The entry price will be $2.05. We will set a stop loss at $2.03, just below the support level, to protect against a deeper decline. The target price will be $2.2, the resistance level. If the RSI reaches 60 or above, indicating an overbought condition, we will exit the position. This strategy aims to capitalize on short-term price bounces within the established range, minimizing risk with a defined stop loss and a clear profit target. Based on the historical data and forecast, BNB shows a downtrend with a forecast price consistently below the recent closing prices. The RSI consistently below 30 indicates an oversold condition, suggesting a potential bounce. However, the forecast price is decreasing. The Bollinger Bands show that the price is approaching the lower band, which could indicate a potential short-term rebound. Considering these factors, I propose a moderately aggressive strategy. I recommend entering a long position at $827 with a stop loss at $815. The target price is set at $878, aiming to capitalize on a potential bounce from the oversold condition and the lower Bollinger Band. To refine this strategy, I will incorporate a layered approach. Initially, enter a long position at $827 with a stop loss at $815. If the price reaches $878, secure 50% of the position. Then, move the stop loss to the entry price of $827 to protect the remaining capital. If the price continues to rise, consider adding another long position at $847 with a stop loss at $838, targeting $895. This layered approach allows for profit-taking while mitigating risk and adapting to potential price movements. This portfolio will be the most efficient strategy. Based on the historical data and forecast, Solana shows a downtrend with a recent bounce. The RSI consistently below 30 indicates an oversold condition, suggesting a potential bounce. The forecast predicts a continued downward trend, with prices hovering around $128 to $132. Considering the support level at $131 and the recent price action, I recommend a contrarian strategy. Enter a long position at $126 with a stop loss at $124. The initial target price is $138, aiming to capitalize on the bounce from the oversold condition and the support level. To refine the strategy, I'll incorporate the Bollinger Bands. The price is currently near the bottom band, further reinforcing the oversold signal. If the price breaks below $124, it signals a stronger downtrend, and the stop loss should be triggered. If the price reaches $138, consider taking partial profits and moving the stop loss to break even to protect gains. A second target price can be set at $140, but with tighter stop loss management. This combined RSI and Bollinger Band strategy aims to balance risk and reward, capitalizing on short-term bounces while protecting against potential downside risks. Based on the historical data and forecast, TRON has been trading within a defined range between $0.277 and $0.281. The RSI has fluctuated between 28.6 and 43.5, indicating periods of both oversold and overbought conditions. The Bollinger Bands show a narrowing range recently, suggesting potential volatility. Considering the current RSI of 43.5, which is approaching the overbought level of 80, and the forecast price hovering around $0.278 to $0.28, I recommend a short-term trading strategy. We will enter a short position at $0.281, with a stop loss placed at $0.283 to protect against a potential bounce. The target price will be $0.277, aiming to capitalize on the support level and potential pullback. To refine this strategy, we'll incorporate the Bollinger Bands. If the price breaks above the upper band, it signals a strong uptrend, and we would adjust the stop loss accordingly. Conversely, if the price touches the lower band, it indicates an oversold condition, and we would consider a long position. For this specific scenario, given the current conditions, a short position at $0.281 with a stop loss at $0.283 and a target of $0.277 offers a reasonable risk-reward ratio. This strategy focuses on quick profits within the established trading range, adapting to the signals from both the RSI and Bollinger Bands for optimal execution. Based on the historical data and forecast, Dogecoin shows a downtrend, particularly evident in the recent forecast prices consistently below the historical closing prices. The RSI consistently remains below the 50 mark, indicating a bearish sentiment. The Bollinger Bands are narrowing, suggesting a period of consolidation before a potential breakout. Given the support price is $0.136 and the forecast indicates a continuation of the downtrend, I recommend a short selling strategy. We will enter a short position at $0.148, placing a stop loss at $0.153 just above the recent resistance level to limit potential losses. The initial target price will be $0.136, aligning with the established support level. To refine the strategy, we will implement a dynamic target adjustment based on the Bollinger Bands. If the price touches the bottom of the Bollinger Bands at $0.135, we will adjust the target price to $0.132. This approach combines the RSI-based entry and stop loss with the Bollinger Bands for a more adaptive profit-taking strategy. The combination of these indicators suggests a high probability of a successful short position with a well-defined risk-reward ratio. This strategy aims for high returns by capitalizing on the current downtrend while managing risk effectively. Based on the historical data and forecast, Cardano is exhibiting a downtrend. The price has been fluctuating within a range, testing the support price of $0.434, but the forecast indicates a continued decline towards $0.386. The RSI consistently remains below 30, indicating oversold conditions, and the Bollinger Bands are widening, suggesting increasing volatility. Given these factors, I recommend a contrarian strategy focusing on short-term gains. My strategy involves a series of short positions. First, enter a short position at $0.434, placing a stop loss at $0.45 to protect against a potential bounce. The initial target price is $0.386. If the price reaches $0.386, consider taking partial profits and setting a trailing stop loss around $0.395 to capture further downward movement. The RSI is in oversold territory, but the forecast price continues to decline, so it is a good time to short. The Bollinger Bands are widening, indicating increased volatility, which could provide opportunities for profit. This strategy aims to capitalize on the current downtrend while managing risk effectively. Based on the historical data and forecast, Bitcoin Cash shows a mixed trend with periods of both upward and downward movement. The RSI consistently fluctuates around the 50 level, indicating neither strong overbought nor oversold conditions. However, the recent dip in RSI values suggests a potential oversold opportunity. Considering the support price of $482 and the forecast for the next week, I recommend a long position entry at $521. A stop loss should be placed just below the support level at $480 to mitigate potential losses. The initial target price is set at $545, aligning with the recent resistance levels and anticipating a bounce back. To further refine this strategy, we will incorporate the Bollinger Bands. When the price approaches the lower band, it signals a potential buying opportunity, and when it approaches the upper band, it suggests a potential selling opportunity. Given the forecast prices are trending slightly upward, I suggest adjusting the target price to $550. This strategy combines RSI and Bollinger Bands to capitalize on short-term price movements while managing risk with a defined stop loss. The portfolio includes a long position at $521, a stop loss at $480, and a target price of $550. Based on the historical data and forecast, Wrapped Beacon ETH has been exhibiting a generally sideways trend with periods of volatility. The RSI consistently remains below 50, indicating a prevailing bearish sentiment, with dips into oversold territory, below 30, on several occasions. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential bounce. Given the forecast for the next week, which predicts a gradual decline, a cautious approach is warranted. Therefore, I propose a contrarian strategy, aiming to capitalize on potential short-term rebounds while mitigating downside risk. My recommended strategy involves a long position entry at $3,020. The stop loss should be set at $3,030, just above the support level, to protect against a breakdown. The initial target price is $3,240, representing a reasonable profit based on the recent price action and a move back towards the middle of the Bollinger Bands. If the price reaches $3,240, consider taking partial profits and adjusting the stop loss to break even. This approach combines RSI oversold signals, Bollinger Band dynamics, and support/resistance levels to manage risk and maximize potential returns. Based on the historical data and forecast, Injective shows a downtrend, with the price consistently approaching the support level of $5.23. The RSI values fluctuate between 30 and 43, indicating a mixed market sentiment, but generally leaning towards oversold conditions. The Bollinger Bands are widening, suggesting increased volatility and potential for price swings. Considering these factors, I recommend a contrarian strategy focusing on potential short-term bounces. We will enter a long position at $5.15, anticipating a rebound towards the $5.85 resistance level. A stop loss will be placed at $5.03 to limit potential losses if the downtrend continues. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI reaches an oversold level below 20, it would strengthen the long entry at $5.15. If the price touches the lower Bollinger Band, it also signals a potential buying opportunity. The target price of $5.85 is based on the historical resistance level. Therefore, the final portfolio will be a long position with an entry price of $5.15, a stop loss at $5.03, and a target price of $5.85. This approach aims to capitalize on short-term price corrections within the prevailing downtrend, offering a balance between risk and potential reward. Based on the historical data and forecast, SEI shows a downtrend, consistently testing the support level of $0.131. The RSI consistently dips below 30, indicating an oversold condition, and the forecast predicts further decline. The Bollinger Bands also confirm this, with the price trading near the lower band. Therefore, a short selling strategy is recommended. The entry price should be $0.123, placing a stop-loss order at $0.126 to protect against a potential rebound. The initial target price should be $0.121, aiming to capitalize on the anticipated downward movement. To refine the strategy, we'll incorporate the RSI and Bollinger Band signals. If the RSI remains below 20 for 2 consecutive days, consider adding to the short position at $0.125, with a stop-loss adjusted to $0.127. If the price touches the lower Bollinger Band, it might be a good entry point at $0.121 with a stop-loss at $0.123. The final target price will be $0.12, taking profit as the price approaches the forecast support level. This layered approach allows for managing risk and maximizing potential returns in a declining market. Based on the historical data and forecast, Cardano is exhibiting a downtrend. The price has been fluctuating within a range, testing the support price of $0.434, but the forecast indicates a continued decline towards $0.386. The RSI consistently remains below 30, indicating oversold conditions, and the Bollinger Bands are widening, suggesting increasing volatility. Given these factors, I recommend a contrarian strategy focusing on short-term gains. My strategy involves a series of short positions. First, enter a short position at $0.434, placing a stop-loss at $0.45 to protect against a potential bounce. The initial target price is $0.386. If the price reaches $0.386, consider taking partial profits and setting a trailing stop-loss around $0.395 to capture further downward movement. The RSI is in oversold territory, but the forecast price continues to decline, so it is a good time to short. The Bollinger Bands are widening, indicating increased volatility, which could provide opportunities for profit. This strategy aims to capitalize on the current downtrend while managing risk effectively. Based on the historical data and forecast, Pepe has been in a downtrend, consistently trading near the support level of $4.06. The RSI consistently remains below 30, indicating an oversold condition. The Bollinger Bands show that the price has been trading within the lower band, further confirming the bearish sentiment. The forecast suggests a continued downward trend, with prices dropping to $0.0000390. Therefore, I recommend a short position. We will enter a short position at $0.0000460. The stop loss will be set at $0.0000480, just above the recent trading range, to protect against a potential bounce. The initial target price will be $0.0000420, aligning with the forecast and a reasonable profit margin. To refine the strategy, we can use a combination of RSI and Bollinger Bands. When the RSI dips below 20, it signals an extremely oversold condition, potentially indicating a short-term bounce. However, given the overall downtrend, we will still maintain a short position. If the price touches the bottom of the Bollinger Bands, it suggests a potential reversal, but we will wait for confirmation before adjusting the position. If the price reaches $0.0000420, we will take partial profits and move the stop loss to the entry price of $0.0000460. If the price continues to decline, we will adjust the target price to $4.06. This layered approach allows us to maximize profits while minimizing risk. Based on the historical data and forecast, Ether.fi has shown volatility, with a recent upward trend followed by a slight downward correction. The RSI consistently hovered between 30 and 50, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price has been fluctuating within the bands, with the lower band providing support around 0.65 and the upper band acting as resistance around 1.08. Considering the forecast, the price is expected to remain in a downward trend, potentially reaching 0.722. Therefore, I recommend a short selling strategy with an entry price of $0.847. A stop loss should be set at $0.882 to protect against a potential reversal, and the target price should be $0.722, aiming to capitalize on the predicted downward movement. To refine this strategy, we'll incorporate RSI signals. When the RSI falls below 30, oversold, it suggests a potential buying opportunity, and when it rises above 70, overbought, it indicates a possible selling point. Given the current RSI of 49.4, which is approaching the overbought level, and the forecast predicting a decrease, I propose a modified strategy. Enter a short position at $0.847, set a stop loss at $0.869, and aim for a target price of $0.735. This approach combines the Bollinger Band's price prediction with the RSI's overbought signal, providing a more robust and potentially higher-yielding investment strategy. Based on the historical data and forecast, DoubleZero has been in a downtrend, consistently testing the support price of $0.121. The RSI has remained consistently low, fluctuating between 25 and 38, indicating oversold conditions. The Bollinger Bands have been widening, suggesting increasing volatility. The forecast for the next week projects a continued downtrend, with prices falling to $0.103. Therefore, I recommend a short selling strategy. Entry price should be $0.107, with a stop loss placed at $0.11 to limit potential losses. The target price is $0.0987, aiming to capitalize on the anticipated downward momentum. To refine the strategy, I'll incorporate the RSI indicator. When the RSI dips below 20, it signals an extremely oversold condition, potentially indicating a short-term bounce. However, given the overall downtrend, I'll use this as an opportunity to enter a short position. Entry price should be $0.103, with a stop loss at $0.108. The target price is $0.0987. This combined strategy leverages both the Bollinger Bands and RSI to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Pump.fun has shown a fluctuating trend with a recent upward bias. The RSI consistently remains below 80, indicating that the asset is not overbought. However, it has dipped below 40, suggesting potential oversold conditions. The Bollinger Bands have been contracting, indicating a period of consolidation, but the recent price action suggests a potential breakout. The support price is stable at $0.00279, while the resistance is at $0.00348. Given this, I recommend a long position strategy. We will enter a long position when the price touches the support level of $0.00279. The stop loss will be placed just below the support level at $0.00275 to mitigate potential losses. The initial target price will be set at the resistance level of $0.00348, aiming for a significant price appreciation. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the RSI is below 20 while near the support level, we enter a long position at $0.00279 with a stop loss at $0.00275. If the price is near the bottom of the Bollinger Bands and starts to rebound, we enter a long position at $0.00279 with a stop loss at $0.00275 and a target price at $0.00348. If both conditions are met, the strategy is activated. For enhanced risk management, we can set a trailing stop loss based on the Bollinger Bands, adjusting it as the price moves upward. The final target price will be $0.00348, ensuring a substantial return on investment while managing risk effectively. Based on the historical data and forecast, Dogwifhat shows a volatile trend with periods of consolidation and upward movement. The RSI consistently dips below 50, indicating a generally weak momentum. However, the recent spike to 49.2 suggests a potential shift. Considering the support price of $0.378 and the resistance of $0.493, and the forecast indicating a downward trend initially, I recommend a cautious strategy. We will initiate a long position at $0.365, coinciding with the first forecast price. A stop loss will be placed at $0.354, just below the forecast price, to limit potential losses if the downward trend continues. Our initial target price will be $0.386, near the recent resistance level, providing a reasonable profit margin. To refine the strategy, we'll incorporate the Bollinger Bands. The price is currently near the lower band, suggesting a potential bounce. If the price breaks above the upper Bollinger Band, which is $0.444, we will adjust our target price to $0.493, aiming for the resistance level. Conversely, if the price consistently stays below the lower Bollinger Band and the RSI remains below 30, we will close the position at the stop-loss price of $0.354. This combined approach, utilizing both RSI and Bollinger Bands alongside the forecast data, should provide a balanced strategy for potentially high returns while managing risk effectively. Based on the historical data and forecast, Sui shows a downtrend with periods of volatility. The RSI consistently remains below 30, indicating oversold conditions. The Bollinger Bands show that the price has been fluctuating within a narrowing range, suggesting decreasing volatility. The forecast data predicts a continued downward trend, with prices ranging from $1.43 to $1.37. Considering these factors, I recommend a contrarian strategy aiming to capitalize on potential rebounds while managing risk. My strategy is to enter a long position at $1.43, coinciding with the initial forecast price. The stop loss should be set at $1.35, aligning with the established support level to limit potential losses. The target price is $1.6, a conservative estimate based on the historical resistance and a potential bounce from the oversold territory. This strategy combines the RSI signal of oversold conditions with the support level as a safety net, offering a balanced approach to potentially profit from a short-term price recovery. Based on the historical data and forecast, Pudgy Penguin shows a downtrend with high volatility. The RSI consistently remains below 30, indicating an oversold condition. The forecast data projects further downward movement. Considering the support price of $0.00977 and the current price hovering around $0.0107, a short position is warranted. We will implement a short strategy based on the Bollinger Bands and RSI indicators. The entry price will be $0.0107. The stop loss will be set above the upper Bollinger Band at $0.0136 to protect against a potential reversal. The initial target price will be the support level of $0.00977. To refine the strategy, we will incorporate the RSI. If the RSI rises above 30 and approaches 40, we will adjust the target price to $0.011. If the price reaches the support level of $0.00977 and the RSI falls below 20, we will cover the short position. The overall portfolio will prioritize the short strategy, capitalizing on the current downtrend and oversold conditions. This approach balances risk and reward, providing a clear exit strategy based on technical indicators and price levels.